welcome to MarketOpen Direct Connect, a webinar series for companies to tell their story, why it's compelling and why it's an opportunity to invest. I'm your host, Stuart Walters, and we're joined here today by Chairman Chris Hodge and Managing Director Kane Marshall of Australian Oil Co, ASX code AOK. Initially, Chris will summarise his chairman's letter, which was released on the ASX yesterday morning, and both Chris and Kane will participate in a Q&A with the attendees. Attendees will have opportunity to ask questions directly, and you can submit your questions via the Q&A tab at the bottom of your screen. A recording of this webinar will be available on MarketOpen and Australian Oil Co's website and social media channels within the next 24 hours. And I'd like to introduce our guests. Chris, Kane, welcome to Direct Connect.
Thanks, Stuart.
Thank you very much, Stuart.
Firstly, Chris, you joined AOK about 3 months ago now. What was, appealing and enticed you to come on board?
Well, I was approached by David MacArthur, who's the company secretary. I know David, I've known him for a very long time. I've known him to be a very good operator. And I also know some other guys on the board. Supplement that with, I've got pretty good knowledge of the Zagasco, or the AOK as it is now, the Australian Oil Company assets, because I was involved with X-State for a while. I'm very familiar with California. But most of all, it was apparent that they needed a steady hand. And I think I could supply that, and hopefully the letter that I've put out indicates that we are applying a nice steady approach to the company.
And you mentioned the chairman's letter yesterday morning. Can you just run through that quickly and give us some insight?
Look, I can. I'm just got it open in front of me. In effect, what we're doing is adopting a step-by-step approach. There's been a bit of a turmoil in the company. We've gone into the Philippines. We're in Canada. Both of those assets are now gone. So really, it's a bit of a reset. And so when I came into the company, Kane had done the work of letting the Philippines go, letting Canada go. So it was, where do we go from here? And so obviously with a small company, the first thing to do is to look after our cash. This is simply the most important thing to do, to be very aware of what cash we've got and how we spend that cash. But the second most important thing we saw was that we've got this producing asset in California. Now it's been a bit sort of overwhelmed by the activities in the Philippines and Canada in recent years. And I got the feeling that California has been somewhat neglected. It's a producing asset. At the moment, it's losing money. It really shouldn't be losing money. So our strategy now is to really get inside this California asset, understand it much better, and to try and sort of figure out exactly what we've got. Can we improve the production? Can we get better prices? Can we do some near-field drilling? Can we do some workovers? And indeed also to see if we've got some other exploration prospects. And they can be anything from high risk, high reward to something medium risk, medium reward. But we need to quantify this. At the moment, it's not quantified. And so to that end, Kane is heading off to California next week. He's going to have several discussions with our operator. We're also going to have a look at possible bolt-on opportunities there, with the end game here to turn California into an interesting asset. Preferably that we can turn it around to make it cash flow positive. And once we've done that, and then I think we can then start to think about where else to go. So the third part of this process is going to be what other assets can we add to this portfolio? And probably the easiest one at the present time might be to add something to California to get economies of scale with this production. But we're also looking in our own home turf, probably Western Australia. We know West Australia very well. I know it very, very well. Kane also knows it well. We've got several contacts here. We're close to government here. We understand the geology. So it just makes sense that we keep a watchful eye on the opportunities in WA. And also, we've also got a lot of experience in Southeast Asia. So we just keep an eye open on Southeast Asia. I have to emphasize, though, with new ventures, to do it properly, we don't go diving in. But the process takes quite a long time. And so we're just constantly churning over, looking through what there is available. And then obviously when something comes along that we like, and then we can make that move. But I must emphasize that our priority here is not to get going into Australia or Southeast Asia. Our priority very much is to get California cash flow positive, and so that we understand what we've got there, and then we can move on from that. So look, in summary, it's very much a step-by-step approach. No big great steps into new jurisdictions. We look after our cash, maximize the value of California, and when appropriate, grab a new opportunity.
Chris, brilliant summary. Thank you. Kane, you outlined streaming Californian operations and looking at value-accretive opportunities. Can you tell us a little bit more about that?
Yeah, so just dovetailing on Chris's comments there and trying to generate economies of scale. Part of that is if you can't, if you're sort of bottoming out in terms of operating costs and you think you can't get them any lower, which I think we can, by the way, is spreading those operating costs out over other opportunities. So streamlining operations is reducing costs, potentially building out other lease positions, increasing gas production not only through our own assets, but obviously maybe bringing some other leases. So that's streamlining operations it's inextricably probably linked to other opportunities as well. So, but when we've been very proactive in terms of not just sitting around in Australia and thinking it was going to be okay. It's about actually understanding what we got on the ground, what synergies have we got with other operators, how can we enhance development through some of our own infrastructure and people. So in a nutshell, that's when streamlining operations, it's about the right people for the right job, getting costs down and production up.
And how do you see the change in administration impacting energy policy and your strategy in California?
Well, timing's everything, particularly in markets. And what's interesting is that everyone talks about drill baby drill and every state's got its own regulations. But in fact, in the past, a lot of our lease positions have been affected by federal policy, whether it's a river or creek or something. Now, that's obviously going to be it's obviously going to get a bit easier around those types of areas of regulation. And so I think leasing particular areas we couldn't before is going to help us, particularly in areas where there's probably the high risk, high reward type stuff. I think, maybe long term in California too, there's going to have to be possibly some change of thinking around policy because of, they've had all these fires. Trump administration's been obviously, as we all know, proactively involved with taking on the Californian politicians. But the long and short of it is we're going to be largely, federally anyway, in a jurisdiction that's pro-energy, pro-economic growth. And you compare that to what's happening here, where I wouldn't be so convinced that that is the case. It's a little bit harder. So it makes sense for us to, look at accretive opportunities in terms of this new policy, but also wider than that, the other exploration, medium, high risk opportunities Chris alluded to as part of that portfolio of properties.
Corporately, the company's in a lot better shape than 12 months ago. Can you talk in any detail about plans to turn California cash flow positive and how you deal with corporate debt?
Yeah, so I think they're linked. So corporately, this company, when I first came in here, I think I had $5,000 in the bank, debt, payables, you name it. And fast forward now, where the last part of this puzzle is getting these properties to a point that they're making money. And part of that is looking at what we actually have in terms of people and resource. And resource means we've got, like, for example, we've got our own compressors. We can reduce the back pressures for our wells. We can increase the rates on production of our wells. We're just very shortly we'll be closing out pipeline acquisition from PG&E that's going to increase production from those wells. Now, by increasing production from the wells and getting our costs down or spreading them over other leases and potentially acquiring increased production, well, if we're in a cash flow positive position, we're going to be a lot better place to look at options to restructure debt. So that's where we're going, and there's a plan to do it. There's a plan to be on the ground to implement it. So they're linked, and this is the last part of getting to this company on an even keel. And in parallel with that, we're assessing new venture opportunities so that we're going to have a nice portfolio, corporately clean, with people on the board who understand the plan. We've articulated that plan to our shareholders.
And with state and federal elections looming, can you give any insights to new ventures in the jurisdictions Chris alluded to in his letter?
We've got 2 elections. I think federally, who knows which way that's going to go. I think federally it's not too bad to get things done, but I can tell you that we're not going to be going offshore. It's incredibly difficult for juniors to do anything with acreage there. We are very well connected politically in WA. We're very well connected to the other operating companies in WA. But under the current government, although they can articulate that they're pro gas exploration development, from a regulatory perspective, it's not that efficient to get things approved in a timely manner. So whatever we go into, we're going to have to make sure that it can be done in a timely fashion in relation to the capital markets. So we don't want to go into something and then find out that it's going to take 2 or 3 years to drill a well or whatever the case might be. So that's where we see what's going on state and federally. There are other jurisdictions in Australia that we're also looking at, which are favourable to investment. But ultimately, whatever we go into, we have to conduct the correct due diligence. We don't want to repeat of the Philippines or Canada. And we need to be able to make it very simple for our investors to understand what we've gone into and why.
There's a question that's come in on Blue Sky Resources. What contingency plans are in place if Blue Sky fails to meet the March 2025 payment deadline under the Omnibus Settlement Agreement?
Yeah, so what I would say to that is that, one, this is a legally enforceable agreement, and it's not an onerous process to enforce it legally. Second is, if that we want to go down that road, well, the contract hasn't completed. We've still got a 30% interest in Red Earth, and it's worth money. So I'm not too concerned about not getting paid. All this money, by the way, that's been paid to us is non-refundable. And given there's just over $500,000 left to complete that settlement, you would have to say it's highly unlikely that's not going to be the case. And I think once that's completed, that's going to breathe some fresh air back into the company. It sort of shows us now a nexus between what's been going on historically with assets and Blue Sky and the focus going forward, and the things that Chris alluded to in his letter yesterday.
And how will the planned on-ground reviews in California influence your approach to minimising operating costs and improving gas throughput?
Yeah, so this is not, going to the US is not just a junket. We have to see where the wells are. We have to look at what counties we can do business in and speak to the counties about, future drilling plans. We want to be able to eyeball where other new leases are that we may go into and what infrastructure is associated with them, and do actually correct on-ground due diligence, not just, it looks good on paper, we're going to do the deal. Everything has to be scrutinised correctly. We need to be able to make sure that we're able to make money. So any exploration drilling, we need to understand what the economics of that are before we execute on the ground. So, that it's all about actually doing all the technical diligence, but also on the ground, what kit have we got and what people to optimize production. So it's sort of a, looking at where are the wells, how can we get things in here, and also abandonment plans for wells and proper scheduling of things and synergies with other programs. So it's quite a raft of things, and it's sort of integrated with other leases that are potentially in production where those operating costs can be spread over our current ones. And there may be opportunities to get costs down in that respect. So, again, they're linked. The accretive opportunities are linked with operational efficiencies, on-ground reviews, and, who can do what we need to do, given that we're based here in Australia.
Can you elaborate on near field and appraisal drilling opportunities identified in California and how they fit into the broader growth strategy?
Yeah, so I think it's important that for any drilling, firstly, that it's going to make money. There's not much appetite for low-risk stuff, particularly production, and people on the call will appreciate that. But if it's medium risk, reasonable size, we've got to look at which counties we can actually we can actually drill. I mean, there's no point doing step-out drilling or talking about step-out drilling in counties which are totally opposed to oil and gas. So we are looking at those areas now, particularly Glenn County and Dempsey. That's an area where, we can do things. Are they of sufficient size for us to organically fund it? Are they of sufficient size to encourage joint venture participation? There are companies that we are talking to that are definitely interested in doing things, but it's about the commerciality. We don't want to be repeating maybe some errors in the past of drilling things where you're a significant distance away from pipelines. Really needs to be a clear line of sight to production and payback too, by the way. Drill the well, get it online, and it pays back within 3 to 6 months. So that's going to take a little bit of time to work up. There are some of those opportunities already in the portfolio, and they have not been articulated to the market. And they are certainly suitable for other operators to participate in.
There's a couple more questions that have come through. What criteria are you using to evaluate upstream gas assets in Australia and Southeast Asia? And how do regulatory challenges affect these opportunities?
Well, I think that the response in California is the same as Australia. We need to see that if it's high risk, the technical part of it holds up, but also there's a line of sight on commercializing any resource. And Chris has spent a lot of time in the Kane Basin, as have I. And it's, if you go into those sorts of areas, which we're not, by the way, but if other sort of frontier basins, really has to be has to be a big resource to justify going in there. You've got to be able to see a line of sight to commercializing it, and you've got to be working within a jurisdiction that's a jurisdiction where policy is favourable. And so obviously we know where we're not going. We're not going to New South Wales, Victoria, and Tasmania. So that's a simple way to answer the question. And probably I don't need to say much more than that.
Chris, this one here, lastly, might be more directed at yourself. How is AOK ensuring the due diligence and governance standards are maintained while pursuing aggressive growth and operational restructuring?
Well, look, firstly, we're not going to be aggressive growth. Our growth is going to be step by step. But let me talk about governance for a moment. We have a good board. We have excellent company secretaries. We listen to each other, and we listen to shareholders. And on the board, there are no prima donnas. We're very much a collective unit. We recognise how important cash is. I think that's absolutely vital. For new ventures, we will be looking at these from the bottom up. They have to work technically on a risk-reward basis, and ultimately line of sight to making money from them. We do not go top down. We do not get into something because it sounds sexy on which we can raise money. We will not be doing that. So technically based, work it up from the bottom up, that the new venture has credibility from a risk-weighted commercial basis. And finally, look, again, it's very much a step-by-step approach. We're very thoughtful and we do our due diligence.
And Kane, anything there from yourself?
No, I mean that's what's required to run a proper business. There's some very smart people closely aligned with this company who have made a lot of money for people, and there's a number of opportunities. Timing will be everything, and I think the thing is too is where shareholders make their money is where it's often what they don't know, and so there's a number of things going on in this company, and there's a clear plan, there's a clear strategy, and what I will say is that in this end of the market, there's a lot of juniors who've got a lot of problems, don't have a real plan, don't have a lot of, there's no real strategy. Here we've got a plan, and we're at least working in a jurisdiction that's favourable to this particular industry. We can do things cost effectively, and there will be other opportunities that will arise that, and quite a few things we've looked at. We've done a reasonable amount of due diligence, but we'll be, as Chris says, we're not going to rush into some hydrogen or helium thing because it's flavour of the month, and get ourselves in a whole bunch of trouble, because we want to focus on the future, but we don't want history to repeat in terms of DD and things like that. And there are things that are sexy enough once you've done the due diligence. So sometimes people have not done the due diligence and haven't seen that sexy side of things. And whereas I think we have that capability to do that. So yeah, it's really about due diligence, as Chris says. It's about scrutinizing things correctly, making sure that you can make some money. Drilling big things is great, but ultimately you've got to be able to commercialize it.
Thank you, guys. That's all that's come through for today. There's some great questions, and really appreciate you guys taking part in this Q&A, and for the honesty and the company direction moving forward. For more information about Australian Oil Co, head to the company website, australianoilco.com.au, or you can follow the company on their social media channels. Kane, Chris, thank you for your time today. It's certainly been tough in the market out there for some time, but keep up the great work, and I look forward to chatting again soon.
Thanks very much.
Thank you.
Thanks.